Greetings everyone, welcome back to another episode of Xenith Trading. Today is actually going to be a continuation of our Tales of Euphoria series. While we've been trading in this range for the past roughly 3 months or so, we have been nailing pretty much every single move from every angle throughout this entire time. So this is a continuation from the previous Tales of Euphoria videos. If you haven't watched them yet, I highly recommend you do, starting with the Return of the Inside Candle, moving into Max Pain, and then Annihilation. And now we are here with Apophenia. Now, the reason why I've titled this video Apophenia, it's the tendency to see patterns that don't actually exist. This is actually a cognitive bias that appears in the market, much like any other logical fallacies or any other cognitive biases that you would see in trading. This is something I've observed through other traders while we've been trading in this range. And a lot of them were comparing current time frame to previous time frames, such as the end of 2020 and the top there, or even comparing it to 2018 or any other time frame. Now, the issue with fractal analysis is that just because they look the same doesn't mean that it's fractal. Okay, and that's where a lot of people make a mistake when it comes to fractal analysis. If you actually read my previous publications on Substack where I do macro analysis, you'll see why they are so accurate. And it's not just because the chart looks the same. Many of these things within the market are cyclical. We all know that. Within this range, similar to our Annihilation video, the range that we saw over the past month or so was meant to annihilate people at the lows, and it did the same thing while ranging at all-time highs. And the entire range recently, we've had tariff tape bombs, we've had negative headlines popping up all the time, and I emphasize both publicly on Twitter plus within my Discord community that headlines don't drive price, they only accelerate it. Whatever you need to provide yourself an assessment with is already provided on the chart. Headlines only fuel and accelerate the imminent move. It doesn't drive the move, it only accelerates it. So we're gonna dive deeper into what we've done in the past month or so since our last video and give you guys an idea of where we are today and how we got here. I'll see you in just a second. Throughout the past month, I've essentially provided you guys a few key areas and levels to pay attention to. And this was also publicly provided on Twitter. For those who are not within this community, I've pretty much kept you guys updated with that. Near the end of January, I had provided you guys with a very simple plan. The plan was, this is your buy the dip zone, and this is going to be your target. This was the FOMC plan that I provided the morning of in pre-market, and I also posted about it on Twitter. Based on our 435 level on NQ and our 370.25 level. This is your buy the dip zone. And as you can see here, it worked extremely well the entire day during FOMC. This is the move that we actually got at 1 p.m. prior to FOMC, which we capitalized on. And then we eventually saw the target near end of week. And again, they also provide that same move just 1 day later. Another buy the dip opportunity that provided another few hundred points every single time it got back into the zone. And from there, we eventually saw the 900s area again. On Friday, we saw a tariff tape bomb from Trump that led to a massive sell-off. And one level that I've been emphasizing pretty much the entire month is 21,679.50 on NQ. This is a level that I provided publicly on Twitter, and I continue to emphasize as your main pivot in order to see higher. Based on that Friday's close, I had provided a weekend watch list and plan that essentially allowed me to come in with a bearish bias. Why? Very simple. We closed the week below 679.50. From a market structure and simple PA perspective, you don't want this to close. Okay? We've already retested this multiple times, finally broke above. Okay? Even with this bullish retest right here, we got a bounce off, and then we broke it. So you don't want something to be reclaimed. And as I always say, if a structure reclaimed, it is likely to continue in that direction. Unfortunately, Sunday open, we gapped down. So the entire bearish bias that I had coming into the week had already panned out in a single overnight session. From here, we actually started longing already. We were trading this overnight action on Sunday. As soon as Monday came around, I no longer talked about shorts or puts or any bearish buys because the entire move had already panned out. And throughout the entire week, we were essentially focused on playing calls and longs. Now, throughout this entire time, the past month, one thing I do want to discuss is the fact that certain individual names were showing a lot of strength under the hood versus the indices. And when I see this commonality among individual names, I can't find myself bearish on indices as a whole. And we played a bunch of different names. Our main focus for the past month has been China. We've been ripping China calls pretty much the entire time. We rode BABA all the way from 80 something to 126 recently. And we still have leaps. We still have so many other swings over for China. But that's a topic for another video. Throughout the week, we get another tape bomb on Friday. Now, again, it's the same thing over and over. And one thing I want you guys to pay attention to this time around is the fact that every single person is going to expect the same type of move. So we got a tape bomb before on Friday. We've been closing red on Fridays, then gapping down. That's essentially been the pattern for the past 3 weeks. Same thing happened on the 31st of January, on February 7th. Now, last Friday, when we saw that daily close on SPX, it was a bearish engulfing candle. This is going to be a little alpha for you who are watching this video who are not in my community. Bearish engulfing daily prints on SPX rarely ever play out the way people expect. You are free to backtest this. I have backtested it myself, which is why I know this. And the reason why I even started looking into this is because I noticed over the past few years that every single time SPX prints a bearish engulfing daily, everyone on Twitter starts talking about it, and everyone is expecting a gap down. And it doesn't happen. That is actually what caused me to initially backtest this over a year ago. And when I did that, I realized it's an extremely high win rate of market bouncing off a bearish engulfing close. Now, fundamental technical analysis says, based on a bearish engulfing close, you should expect continuation lower, correct? Same thing with the bullish engulfing. However, specifically with SPX, that rarely ever happens. I believe within the past maybe couple of years, I think the win rate is at least 80%. Don't quote me on that. I'm just trying to think back to when I was backtesting it. And that provided me confluence on continuation higher. Okay. Not only that, if you actually just look at SPX, a very simple technical perspective, the one level that I provided, or the one area that I provided to you, was 59.50.18 and 59.66.09. The day we gapped down on this on January 27th was the day I posted on Twitter, this is the level that needs to hold, and this is the only thing you need to focus on the entire time. As long as bulls hold this area, they are in control. And again, same thing happened on the 3rd. When we gapped down, we immediately got bought up again, and we held above that level once again. Now, not only that, you have this macro trend line that we've been bouncing off of. 1, 2, also a retest intraday on this trend line. And this purple line, you might not be able to see it here. This is a macro trend line dating back to, I believe, 2023 that we've also been holding the entire time. And we just got to bounce off of that. So you have multiple points of confluence to provide you with an analysis towards upside. Now, the move last Friday was a simple mean reversion. I mean, granted, this move should not really be a surprise considering the fact that we closed 4 days green and we popped another 150 points from the low. So it's not really a surprise. But you take into account the title of this video, Apophenia. You take into account the cognitive biases and logical fallacies that are so present within the market and the traders within the industry. And you take a look at what we've been experiencing in terms of the price action and patterns. Fridays, we've been closing red, then we gap down. Friday, red, gap down. Friday, red, people are expecting it to gap down. And this is where the alpha that I provided to my community comes in. I know there is a very high chance that when SPX prints a bearish engulfing daily candle, it bounces rather than finds continuation. We've been using the same levels the entire time throughout the range. And on Saturday, when I initially wrote this long thesis for you guys, I had discussed pretty much multiple angles in how we can actually analyze and look at the market to prep for our week coming up. What provided me the bullish bias was number one, the bearish engulfing close. Number two, the bounces off 59.50 and 59.6609. Now, throughout this entire time, when you look at the price action that has occurred and you consider the gap downs and the dips that we've received, if bears were in control, we would not see momentum on the bounces like this. And again, no indicators evolved. Forget about the levels, forget about everything else. If you just look at price action from the simplest form, if the market was bearish and it was weak, we would not bounce the entire gap down every single time. And we recovered it the entire week. Even if you take a look at the perspective of NQ, again, we had a 1,000 point downside move, a little more than 1,000. That was immediately bought back the same week. We gapped down again for another 600 points, immediately bought back the same session. This is not weakness, this is strength. And this is something you guys have to pay attention to when you're looking at momentum in the market. From a very simple price action tactical analysis perspective, you cannot possibly provide me an argument that this is bearish just from that one assessment. You can't. There is nothing that you can argue to say the chart is bearish. Regardless of the gap downs and the attempts by the bears, we've completely regained the entirety of the moves every single time. So this is the basis that led us to this past week and how we nailed and continue to nail this entire range. It takes patience. And granted, throughout the intraday sessions, especially for the past couple of weeks, the action on indices have not been that great. We've been trading in relatively smaller ranges, and a lot of the times it's pretty choppy throughout the session. So unless you were catching moves right at the bell, the RR throughout the entire rest of the day was extremely low. And your best bet, especially what we were doing, is really just trying to catch late afternoon trades on 0DT and taking advantage of that volatility. But aside from that, it was very slow action. The ironic part about all this is that throughout all these sessions, the bears just come out of nowhere and celebrate. And I love it. I love it because they celebrate their temporary 30-minute wins just to see the entire market rip in their faces again. Like CPI, for example. People celebrated CPI. And honestly, most of the people probably were not short for CPI. So what do you think they did after market open? They likely tried shorting after CPI. So why don't we take a look at what happened on CPI right at the open? Anyone want to take a wild guess on where we longed? 544.50. That was the very first long I gave you guys at open. After that, I gave you guys an entry to long 585 to 576. What was the low here? 580.50. Then I gave you another long entry, 654. These are all based on my levels, by the way. 654. What was the low here? 646. 3 entries that I provided you guys with longs on NQ were all intraday lows, right at the bottom. Meanwhile, the same bears that are celebrating continue to short the entire time while price rips in their face. And the same thing happened the day after. They just keep shorting. Okay? And I'm saying this from people I've personally observed. This entire plan that you guys see here with entry 1, entry 2, confirmation for 22K, SNR flip, this was all provided on Tuesday morning. I provided you guys specific areas to look for longs and a trigger point for 22K on NQ. Such a simple plan. We missed the entry 1 just by a sliver, and I actually kept this 585 bid open for pretty much throughout the entire week. Ended up getting filled and TP'd on it during CPI, which was ridiculous, and I was done for the day with that. And then we finally get the move on CPI day into Thursday, and we break above the 820, 84875 area. and then we ripped to 22K towards end of week. If you take a look at the price action from this perspective, you take a look at the gap down that we had this past Sunday and how it immediately got bought up within the first hour. You take a look at CPI. CPI came in hot. PPI came in hot. You take a look at CPI. This immediately got bought up the same session as well. This is not weakness. It's so obvious that it's right in front of you, yet people become so biased in what they want and expect rather than react to what the price and the market is providing you. And that's the problem with trading with a bias. Okay. Now, granted, this range trading at all-time highs the past month is actually very similar to the entire Annihilation video that I provided, because this is exactly what market makers are trying to do. The moment we swept below these range lows, everyone thought we were going to see much lower. Everyone. Meanwhile, I was the one who gave you specific bottom targets to take longs on SPX. And this is a target that I provided you guys over a month prior to this happening. And from there, and again, you guys can watch the video and just look at the squiggly. Everything has pretty much played out exactly how we expected. The only difference is that this range took way longer than I ever would have thought. And then we finally got the break of 60.99.97, and now we're trading right near all-time highs, except SPY actually saw a sliver above all-time high, just a little peak. So on that note, I am actually going to talk about SPY. Over the weekend, I had provided you guys with an entire thesis that I came up with while I was shoveling snow. And it started with the same sentence and the same phrase that I gave you guys before I called the Euphoria top back in December. Can't shake the feeling. I have a very strong intuition when it comes to a lot of things in my life. This is something, I don't know if it's been trained subconsciously or whatever it is, but especially with the markets, there's a very strong intuition aspect of my trading. And I wrote all those thoughts out for you guys, and I dove into the charts even more once I wrote all that down. So I gave you guys an analysis from different angles of how we can look at it. Going back to what I mentioned earlier about fractal analysis. Now, again, just because the charts look the same doesn't mean that it's fractal and that you should expect the same result. I found a potential fractal analysis on SPY. Although price action was not exactly similar, it did definitely provide some similarities. And I remember this specific time frame because the sentiment during this time was exactly the same as it is now. Exactly the same. A lot of people were expecting a top during this time, and we just never got it. I'm not going to tell you what time frame this little chart here is, but if you want to go ahead and try to find where I'm comparing it to, feel free as homework. This is essentially what I found as a comparative fractal in both price action plus sense. And I shared this with you guys on Saturday. So basically, from the time that I shared it with you guys, let me actually just move time frames here. This point of the comparative time frame was essentially Friday's close that I was looking at last Friday. And again, it took a little longer. We saw one more dip and then we broke out. The same exact way we broke out in this comparative time frame. Now, the other angle that I looked at this with you guys is from a volume profile, auction market theory, order flow perspective. When we actually take a look at the balances and the ranges that we saw throughout the entire past 3 months, this largest balance area is essentially the 59.66, 59.50 area on SPX. This is the December all-time high, which is essentially 60.99. And then this bottom range is basically that 57.83 bottom. When you're taking a look at this, the largest balance area was right around that 59.50, 59.66, all the way to about 60.20. I'll post a screenshot of what I shared in Discord regarding this. There is no argument that you can make now from this perspective that the market was going to provide more downside as long as we were trading above this. There is nothing you can argue, which just provides more confluence in our assessment that we were going to rip higher this week. Regardless of headlines, regardless of data. If the market wanted to dump, they would have done it already. The amount of tariff headlines we got hit with, CPI being hot, PPI being hot, nothing could stop bulls from sending this market higher. And these are just 3 different angles I've already shown you to provide confluence for that. So when you're taking a look at this from an auction market theory and a volume profile perspective, if the 5950, 5966 area was to break, there is nothing stopping it to 5600. There's no way they would do it this early, especially when they've already tried down here at 5783, and we have this entire balance here. And now we've ranged above this, providing another balanced zone. And this is essentially a very simple S&R flip. You can call this your support, you can call this your demand, whatever you want to call it. We have now flipped this. So the probability of market seeing more upside is much higher than it's seeing downside from this entire range. This is from a very simple volume profile assessment. Okay, we have acceptance above, and we were trading in this entire range the past few weeks. Oh, here it is. Here are my drawings. So when I wrote this, this is essentially the entire volume profile perspective from a macro level, which pretty much comprises of the entire range, all the way from the December highs into the lows into the recent highs. So unless we break this, there's absolutely no reason why we would see lower. And the moment we do break this largest balance area, this node here, we're going straight to 5600 this time. So not only are we looking at the market from the momentum perspective, not only are we looking at it from a simple TA perspective with using a macro trend line here and this purple macro trend line here, not only are we looking at it from the NQ perspective with our levels, we're also looking at this now from a simple auction market theory perspective. So this is where we were trading right around, I believe it was like 60.20 at the close on Friday before I wrote this. So the only other direction that this is going to take is up, because if not, we're going straight down. I mean, that's the only other scenario. And trust me, when I was writing that, although I had a lot of confidence in seeing continued upside this week, I put on my bear hat and I did my best to be a devil's advocate and find bearish scenarios. I just couldn't. Everything is right in front of me. It was so obvious. It's common sense, honestly. And we executed this week so well. Not only did I destroy NQ this week, this month I brought in just roughly a little over $70,000 on NQ. Just this month, 2 weeks in. SPX, we nailed this perfectly. We took 6120 calls and wrote it right before CPI. We trimmed another contract at break even, held one through CPI. The day CPI came, we averaged down on it heavy and took it for, I believe it was like 200 something percent, 250% into Friday. It was all executed so well. A lot of other analyses I saw on SPX were comparing this to 2018, 2021, and all expecting like this big dump to come before we see new all-time highs or another attempt at all-time highs. Everyone was expecting this to dump here, here, here. We never got it. And again, it's something so simple. When you're just looking at the chart and you see these gap downs and you see every dip is getting bought up immediately, that's not weakness, that's strength. That's momentum for bulls. You can't possibly be bearish. You just can't. I mean, I don't think there's any other way to put it. There's nothing that you can bring to the table with me right now and debate that getting a massive gap down that gets bought up is bearish. You just can't argue that. In this video, I've now shown you multiple different angles in which I use to provide an assessment to our community and how we prepare for this past week and completely nailed it. Here's the other thing. When we're taking a look at price action, from a very simple contraction expansion perspective, this is a 3-month range. You don't fade a breakout of a 3-month range. You just don't. Especially when we're in a bull market, we're about to hit new all-time highs. You don't fade a breakout. The easiest method in trading this is by longing. It's the least path of resistance. It's not down, it's up. All these tariff tape bombs, these headlines, CPI being hot, PPI being hot, it did nothing to the market. If you look at this from a macro perspective, it really did nothing. It actually just provided you more buying opportunities. Now, the other thing I looked at with you guys is VIX. And I have a critical 1608 level that I use, which is basically my risk on, risk off level. As long as VIX is trading below 16, it is unwise to short. I think that's all I got. Honestly, this month has been so lucrative, it's actually insane. With NQ, it was very simple. We focus on our playbook version 4.0. Obviously, not all the levels are on here. If you're in the community, you'll have them. But it was a very easy week on NQ. And we used every area, every big pivot as an SNR flip. Once we get above 67950 and we hold above it, we're looking at 76675. And we even got the SNR flip on Thursday. Okay. Then we finally broke 820, 848. We held above that, got another bullish retest right on Thursday's open. Now we're trading at 22,200. Okay, it's all very simple. This was all documented. Every single thing we did was documented. The entire analysis was documented. What I plan to do actually is the thesis that I wrote in D King Journal. I'm actually going to post both of them on Substack just for an easier read. The one from December kind of started off this whole Tales of Euphoria series, plus the one that I just wrote last weekend, which helped us execute the entire upside for this week. To summarize this, we looked at the market from different angles. Number one, from a very simple technical analysis perspective. Number two, auction market theory volume profile perspective. Number three, momentum. Okay, something as simple as spotting momentum on dip buys, you can use it as an indicator as strength, not weakness. And from here, I probably expect SPX to finally hit my targets. My targets are around 6180 to about 6235, which actually lines up perfectly with the squiggly. All right. Now, again, the squiggly is not perfect. I don't expect this to be perfect, especially when it was already pretty much perfect for almost half the projection. A range is expected to be built. Okay. Contraction and expansion. Don't ever forget that concept. So we are now pretty much here at this point of the projection. And I'd like to see if they can actually bring this up to my targets around that 6180 to 6235. I gave you guys a specific timeline that we would need to see this move happen probably by February OPEX, maybe into March to fulfill. And I'm also ready to start positions in put swings for a few months out. I've been trading this according to the initial squiggly that I provided you guys back in early January. I have not changed a goddamn thing. The way I've been executing this and the entire plan, I've been following this. You guys notice I don't change my analysis. I don't stray away from it, especially when it's something macro like this. I don't stray away from it. Whatever anyone else says, it's just noise to me. I could care less about what you think about the market or what you say about the market. I only change my analysis when the chart itself is telling me to. And as of right now, there's no reason to change it. There hasn't been a reason to change it. We held 59.50. We held 59.66 twice. The dips were bought up immediately. As long as this area held the entire time, I have absolutely no reason to be bearish. So unless this flips, the likelihood of seeing all-time high is extremely high. I have been following and executing my trades based on my squigglies from day one, and I will continue to do so unless the market tells me something else. And then once we reach my targets here, I'm going to start positions in longer term swings for puts. That's been my plan for a while. I've already added all the puts a few weeks ago, and I'm just waiting for the moment to strike. Don't let your ego and your bias stop you from trading the market the correct way. Trade what's in front of you. The chart will tell you everything you need to know. I have all of my pivots in mind. I have all my line and sand areas. I have all my triggers for directional flips. This is always planned out on a weekly, monthly, daily basis. So unless those levels or those areas flip, my analysis never changes. So I hope you guys enjoy this video. It's been a great month. It's been a great year. We've been off to an extremely hot start. I mean, we've destroyed China for the second time now in the past like 6 months. We caught bottoms on China last summer at the very bottom, rode it all the way to the top. And then we caught China again at the bottom last month. And we've been riding it all the way to the top. So that's pretty much how our trading has been from a swing perspective. I wanted to do this video for you guys so you guys can see from my perspective, and especially for those who are not within the community, get an idea of how we executed this entire thing. Honestly, this whole Tales of Euphoria series, I believe it's my magnum opus. It's some of the greatest work that I've put out publicly, and I hope to do a lot more of these. I'm not sure how long the Tales of Euphoria series will run. If we continue to follow the squiggly projection that I provided you guys last month, then I may make a couple more videos until the entire thing concludes. But for now, this may be the last one. I've provided everything you guys need publicly and privately in Discord. You guys are pretty much on your own now. But the whole purpose of these videos is for you guys to gain more insight into how I look at the markets, how I execute my plans based on what I've analyzed and assessed, and provide you with the results and the recaps of that. If you guys like my videos and enjoy them, find value in them, please, on this side of my body, there's a QR code you can scan to find all the links to our other platforms. And I would appreciate if you'd like, subscribe, and share this video as well. Catch you on the next one. Thanks.